Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Fausto Pugliese, president of Cyber Trading University, to discuss using Nasdaq BookViewer to trade market trends. And it's so interesting, Fausto, we're almost sector company agnostic. It applies for all different types of companies.
All different ones, Jill. And being earnings week, there's been just so much been going on with the market and regarding with some of the things. But like Nasdaq BookViewer has been such a big help in today's markets. And I want to start off talking about Raytheon. I mean, this stock in general just took a very, very big beating. It's been on a downtrend. It's been getting hit pretty hard. And sometimes people look at it like, when do I average down here, or do I take my losses now? And when you look at the Nasdaq BookViewer, you'll notice that there was a 157,000 share buyer right around that, was at $81.74. I mean, that is a substantial order. When you look at the BookViewer, look on the bid and offer. There's not that many shares, 10 shares, 50 shares, 100 shares. But when you see 150,000, it's like, why would someone want to buy at that specific price? But as you work your way down, you'll notice that as soon as it came to that big buyer, the stock just basically bounced. And this is like something people have to learn, that when they try to figure out, do I average down? Do I take my losses? Well, listen, the stock's not going to zero. There's always going to be buyers, and someone thought it was a good trade there, and that's why you have to follow the BookViewer.
Right, and you can see here that it tested at 81.50 exactly with the...
And it bounced about 5 points from there, almost a little bit more than that. So sometimes you can average your cost down, but you got to know when to do it and when not to do it.
All right, let's move along now to our next one, Siri, a name that trades quite frequently. A little bit of news in the market this week with that.
So Siri's been on a really good tear lately. Its stock basically was right around the $3, $4 price range. It's been on a big rally. Now the thing is this. There's an old saying, whatever goes up comes down twice as fast. So the thing is, when you're trading a stock, you want to know, okay, where's the big resistance levels? Because not only could you use the BookViewer as a day trader, you could use it as a swing trade. So Siri Trader was making a really, really big run. So the goal is it going to 7? Is it going to 10? Is it going to 20? Well, when you look at the BookViewer, you got a 531,000 share seller sitting at $7.75, Jill. And if you look as we move on to the next slide, you'll notice that it hit that resistance. And listen, they're 10,000, 50,000, but we're talking 500,000. You're not talking chump change. Hits that resistance, a couple of days later, boom, the stock comes right back down, and now you're hovering right around the $4 price range. And that's how you can convert a big winner into a loser.
Yeah, let's take a look at DWAC. Right? I mean, day traders love to trade this.
DWAC is such a fun stock, and this is a classic example of what's called a breakout. So everybody wants to know, like, how do stocks break resistance levels? How do they know how they're going to go higher? I thought to get out. My indicators told me to do that. Well, when you look at the Nasdaq BookViewer, the goal is you always want to have a game plan. See, what's nice about it, it teaches you the future. You're not focused on the past. And it's all about those orders. And right here on DWAC, which is a fun stock, there was a 240,000 share seller at $23. So as a stock, you could see it's been having a really good trend. It got to that resistance, and it stopped right there. Now, this is where the breakout kicks in. That 240,000 shared seller got done. And the way you know that is by looking at time and sales, and you could see it obviously just trickling away, which a lot of people neglect and don't realize the value of that time and sales. But you saw it on BookViewer, and you could see those orders actually just dwindling down. And what happens? Stock goes up right to 25.
I mean, that's really quite the run there. And you can even see, okay, when is it time to sell? If we look at the BookViewer there, you see that 25, 24 price is what you need to be paying attention to.
Because as you're working your way down, Jill, you'll notice there are sellers at every single price level. And because we got away from fractions, we're at decimals, they're at every single penny. But you could see it when you work your way down on that BookViewer, boom, right there, 252,000 shares. So the game plan as a trader is like, okay, my next resistance levels will be $2. Now, $2 is a lot when you're talking a short period of time. It didn't take too long to get there, maybe like 30 minutes. And $2 could be a very significant profit. But if you didn't get out there, Jill, look what ended up happening. Stock came right back down to $20, and that's how you convert a winner into a loser, and that's not what you want to do, and that's why the BookViewer is such a value tool.
Let's wrap up and talk about XPEV. I believe this is an ADR. I mean, you can use it to trade anything.
Absolutely, and I want to save the best for last, because this stock was a great stock that we traded the other day on the pre-market. Now, a lot of people don't realize that you can trade in pre-market, and you can use the BookViewer. It starts really early. A lot of traders can't, depending on what kind of broker you have, they won't allow you to trade until the market opens up. But if you have a direct access broker, you can. But here on this stock right here, this was an awesome trade. So right around, what is this, around 9.55, the stock had a big pop from 15.75 to 17.50. Now, what was classic about this stock that there was a 200,000 share buyer sitting at 1720, and he was sitting there for about maybe 20 minutes, right before the open. Now, I don't know, maybe he got an order, maybe some trader got an order and had to buy it there, but listen, if you have the book viewer, you could see that because there was no other orders out there that substantial at that price.
Right.
So it ended up happening once the market opened up, Jill, boom, the stock just took off and went past 18, shot all the way up to a price of $21 in a matter of 30 minutes. And it all was predicated on that big buyer that ran it up. And by you seeing those orders, and if you had access to see what's happening pre-market, you could have had that game plan to get in. But once again, focusing on where to take that profit.
Fausto, you had mentioned that you can trade pre-market, you could trade aftermarket, and for newer traders out there, is there a benefit to only trade from 9:30 to 4, or is it okay to trade pre and post-market?
Well, the advantage is that without being as a market maker and I used to trade, you having access to that data before the street gets in or the general public to get in. Remember, they put orders in, and they can't get their orders executed until the market opens up. But as a trader, we're out there and let's say you had a guaranteed order. I'm going to go out there and say, oh, well, I got Jill wants to buy it. Well, I got a guarantee buy. I'll go out there and buy it. And everybody could see that who has access to that account. And then what happens when these orders start filling in, they have to get executed, and that's how they get driven up the way they do. But when you have the Nasdaq BookViewer, which basically controls maybe about 50% of the volume of the total market, that's a substantial amount of volume to kind of give you a sense of direction where the stock's going to go, other than everyone, general public, just trading a couple hundred shares.
All right, Fausto, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.